Hello guys, welcome back to my channel. Today's video we're going to look at objectives of accounting, and there are not quite many. There are basically 5 objectives of accounting, and the first objective of accounting is to keep systematic record of all business transactions. What does this mean? The reason why accounting is made is to record business transactions. That's the major objective. Why accounting is done in an organization, to keep track of the business transactions. The second objective is to ascertain the results of the business. Is the business making profits or losses? Is the business gaining or is the business making losses, so that a decision can be made? That's the second major objective of accounting. And these two objectives, the first one and the second one, go hand in hand. It's from the transactions, the business transactions, that you know that the business is making a profit or loss. And from the profit or loss, it helps you to attain the financial position of the entity, of the organization. How do you attain the position of the financial position of the organization? Is through the financial statements. For example, the balance sheet, the going concern. The balance sheet shows you the going concern of the business. Secondly, the profit and loss, which shows if the organization is making a profit or if the organization is making a loss. So, by accounting for each and every asset owned by the entity and liabilities incurred by the entity, we get to know the exact financial position of our business at a particular date. In this regard, we prepare the balance sheet to check the value of the assets and the liabilities. Because the balance sheet is basically made up of 2 components. 3, but in most cases, equity is like the overall. But the balance sheet helps you to keep track of your assets and the liabilities. In an entity where the assets are greater than the liabilities, then the business has going concern. The going concern of the business is good. I'll explain what going concern means in my other video. And the liabilities, if the balance sheet, as I promised, we shall look at a balance sheet component per component of the balance sheet. So if the liabilities are greater than the assets in the balance sheet, that means the business's going concern is uncertain. That's why you find things like a cash flow, the operating activities are in negative, the cash flow statement is in negative. That shows that there is a concern with the business cash flows once the liabilities of a company are greater than the assets of the company. So the other objective, the last 2 objectives, are to provide information to various users of the financial statement. In my another video, if you could see through my videos, you'll find a video I've written about the users of accounting information. There are quite many users. So the objective, another objective, objective number 4 for accounting, is to provide information to various users of financial statements. Here, for example, we have stakeholders, the owners of the business, and those are users of financial statements. And we have the public, we have the employees. Actually, users are divided into 2. We have external users and internal users. External users, let me say, I can give an example of the media. Those are external users. We have an example of the public, the people who want to invest, maybe the investors. Those are external users. Then internal users have the stakeholders, the owners, the directors. We have the employees who use financial statements to know how the business is standing. So the objective is to provide information to these, mainly to the stakeholders, because they are the owners of the business, how the business is moving. Then the other last objective, there are quite many, but these are the major 5 objectives of accounting. To assist the management. How do accounting assist management? By analyzing financial data of the entity, providing interpretations of formal reports, and to assist management in handling daily. So any financial accounting helps management in running of today activities. For example, there is what we call management reports. So an example of a management report is a cash flow. So a cash flow helps, and a a cash flow helps the business, the management. When we talk about management, we mean the middle level management. For example, the middle level we can do with supervisors, we can do with managers, we can do with CEOs. So that middle level management, the CFOs, that's middle management. So the middle management is guided by accounting, by the management reports. We shall look at them. I'll come and do another video of management reports. What do management reports mean? What are they? Examples. I'll break them down. So for the purposes of this video, accounting assists the management in making decisions. It will assist supervisors in determining how can we improve the operations of the business. Because I've told you an example of a management report is a cash flow statement. A cash flow statement, it basically shows you how much money you're bringing in and how much money is going out of the business. The amount of money that is coming in the business should be way much far and much greater than the amount that is going out of the business for any business that is performing well. So it's from accounting that these managers will understand that and improve on how operations of the business should be running. Please comment. If you have any question on anything more about the objectives of accounting, please let me know in the comment section below. Subscribe and like the video.